Hello guys, welcome all. I'm your host CPA Deko Mohammed. So this class is basically for the beginners. I have seen most of beginners are having problem with trading profit and loss account. So this video is just for the beginners, just overview and some illustration, which are just the basic of the trading profit and loss account or the income statement. So if you want the complex, I have so many videos I have solved this complex of trading profit and loss account. I think we're gonna go and watch them, but this video is basically for the beginners. So we have what you call profit, trading profit struggle loss account, because you can either make a profit or loss. They are also called income statement. They are also called income statement. So basically, what I want to illustrate for the beginners, we normally compare two things. We only compare two things. We have the sales and also the cost of sales. We are only comparing these two things. So that once we less the sales from the cost of sales, we get what you call, when we say sales, subtract cost of sales, you will get what you call gross profit. Then you get what you call gross profit. Then from this gross profit, we add incomes less expenses. Then you will able to arrive the net profit stroke net loss, whichever the case. Net loss. Now, guys, for these sales can be derived by only taking two things. Let's say before I give the formula, let's say we have early traders. So let's say these early traders, they bought, let's say they sell 10 shots at each at 1,000. Now, this means their total sales for this for the early traders, their sales will be 10 multiplied by 10,000. That will give us 10,000. 10 times 1,000. So let's say this is their sales. We are talking of early traders. Early traders sold 10 shots each at 1,000. So the total sales is 10 by 1,000. That is the 10,000. But sold to, let's say we have sold to Michael Traders. Now, let's say these Michael Traders have returned. Michael Traders returned let's say they returned one shot. Now, and remember this shot is going at 1,000. Now, if they returned, so our sales now will be 10,000 minus what was returned, which is 1,000. Now our total sales is 9,000. Now for you to get, this is our net sales, not just sales. You can say net sales. Net sales. because we have sold 10,000. We have sold 10 shirts, each at 1,000. And we had 10,000 sales. Now this 10,000, one shirt has been returned by Michael Traders, return one shirt. Now that shirt we have to less. Therefore, we normally say sales, net sales is equal to sales subtract sell return. We call it say sell return. Or we also call them return inward. Return inward. That is the net sales. You take the sales, subtract the sell return or the return inward. Now we compare this net sales with the cost of sales. And we say the cost of sales, we normally take the sales minus the cost of sales. So this sales is cost of sales is equal to sales by this cost of sales. This cost of sales now, for us to get the cost of sales, we normally take the opening source. Cost of sales is equal to the opening stock. Then we add our purchase. Then from this purchase, you less purchase return. We also call it return inward. Sorry, return outward. Once you less this, you also less the closing stock. So for you to get the cost of sales, you take the opening stock, add the purchase, less the purchase return, then you less the closing stock. For us to know this cost of sales, let's say the still example of early traders want to drive the cost of sales. Let's say early traders have a stock of 5,000. Let's say from yesterday's sales, they had an opening stock of 5,000. Then from this 5,000, maybe they purchase 5 shirts at 1,000. If they purchase 5 shirts at 1,000, that will be 5,000. So you are going to add that 5,000 as a purchase. Then out of these 5,000, maybe one shirt has been returned, which is 1,000. And then you less the closing stock if you had a closing stock. So 5 plus 5, 10, minus 1, 9. This will come to 8,000. That's all about the cost of sales. Then you compare the income and the expenses. So in a nutshell, what I can say, let's say, want to give a brief example here. So guys, let's say we have a brief illustration. The first thing you need to begin is the title. Let's say the title is Early Traders. Then you want to prepare profit loss, or you can just say income statement. Then you must have a date. Let's say for the period ended 30th December 2023. Now let's start with the sales. So let's say our sales was 50,000. From these sales, we less these sales will less sell return, or we call it return inward. Now let's say the return inward here is 5,000. So you need to have in bracket because you're going to less it. We're going to subtract that 50,000 from 5,000. So if you take sales minus less sell return, you get the net sale. You're able to get the net sales. For this case, the net sale will be 45,000. Now, this net sale, we are going to less the cost of sales. The cost of sales. We're going to start with the opening stock. Let's say opening stock is 5,000. Then opening stock, we are going to add purchase. Let's say our purchase is 10,000. From this purchase, we are going to less purchase return, or they call it return outward. Return outward. We also call it purchase return. So we less it, let's say it's 2,000. So from this, you also less the cost of sales. Cost of sales. Let's say the cost of sales is 3,000. Now, what you're going to do, we are going to take this 5,000 of the opening stock, we add 10,000, that is 15,000. 15,000 we less the return outward minus 2, that will be 13,000. 13 minus 3, that is 10,000. So you're remaining with 10,000 as our cost of sales. So this 10,000, we're going to subtract it from the sales. This net sale, this net sale you are seeing there, we are going to subtract it from the cost of sales. Sorry, this is not cost of sales. This should be closing stock. We are going to less here closing stock, not cost of sales. Sorry for that. So that now this 10,000, this 10,000 will be now the cost of sales. So you're going to less 45 against 10. Net sale is 45, the cost of sale. Net sale is 45, the cost of sale is 10,000. So you're going to subtract that. So we'll have here gross profit. Gross profit of how much? The gross profit will be 45 minus 10, that is 35,000. Now, from this gross profit, we are going to say add other incomes. So the first income, let's say we have discount allowed. Not discount allowed, but we have discount. Discount allowed is an expenses, so we'll have discount received. Let's say you have a discount of 10,000. And let's say we also have commission received. Let's say it is 5,000. So you're going to get total income which will be 35 plus 10, 45 plus 5. That will be 50,000, 50,000. Now from this, we're going to less expenses. Let's say the first expense that we have here is discount allowed. Let's say it is 5,000. And you also have carriage outward. $3,000. I forgot about carriage inward. Now, carriage inward will normally affect the purchase. If there's any carriage inward, it normally affect the purchase. You are going to add back as a transport expenses. Now, we also have rent. So let's believe these are our three expenses. We have 5 plus 3, 8 plus 2, 10. I need to show them in bracket to show that you are subtracting. I will have what you call net profit. Net profit is 50 minus 10. That is 40,000. I hope you enjoyed the class. We are going to start up again the income, the balance sheet. And also now we move to another complex videos. Thank you for watching. I'm your host, CPA Deko Mohammed.